News just coming in. Yes Bank has received a binding offer worth $1.2 billion from a global investor, a single investor. The bank has informed the exchanges. The offer is subject, of course, to necessary regulatory approvals and shareholder approvals as well. The bank has also said that it continues to be in talks with other global and domestic investors, and it has received some of those offers already. The stock is active, up about 22%, a shot in the arm, certainly, at a point of time when most people didn't believe that this would happen. It's now up 30%, by the way, 73.80. Ira with me as well. Ira, not a surprise because it was in the realms of conversation, but one single investor.
Yeah, I think so. Let's start with the basics and then we'll go on to the issues and some of the questions which will be raised. So the last time around, they had managed to raise about 1930 crore, so about $250 million odd dollars, a little bit under that is what they had raised. Right at the start, when Ravneet Gill came in, he said we need about $1 billion, a little bit more than that, to tide us over. So assuming that this fundraising comes through at 1.2 billion, addition to the QIP that was already raised, I think they will, in the near term, have adequate capital, not just to clean up their books and provision for it, but also then to start growing, because I think the problem has been that they have not had enough capital to both provision and grow. And also we don't know the extent of the problem, in the sense that some of the recoveries, etc., may not come through. So point number one, at 1.2 billion, if the deal goes through, you now have Yes Bank, which is adequately capitalized to clean up and grow. The question is whether this 1.2 billion is actually going to go through. I think rough back of the envelope calculations done by Sajit Mangat suggest that about 33% at current prices.
Yeah, 18,000 odd crores market cap.
So about 33 odd percent equity. The RBI rules don't allow that.
Actually, more than 33%, I would say.
The RBI rules don't allow that. So you have 5%, above 5%, you have to get approval from the RBI firstly. You can go up to 10% in certain cases, especially if you're a financial institution. And the only provision, to my mind, which can allow up to 33% being held by a single investor, is a provision in the rules which says that under stress situations, the Reserve Bank of India can make an exception. These are the guidelines which are for private bank ownership patterns, shareholding patterns. Those guidelines, I think, date back to 2013, 14, maybe 15. And in that, there was a provision on sort of the RBI having a final say if it feels the need for a bank, to be rescued, for the want of a better word. Otherwise, they don't allow anybody to hold more than 10%. I mean, look at what happened even with HDFC and Bandhan, right?
Yeah.
HDFC had to dilute below, they had about 14% and they had to come down to 10. The RBI very clearly said that. And that is probably why the wording of the release sent by Yes Bank is very careful, right? A, they haven't named the person. So we don't know who this is. We don't know if this is a financial company. That will also be important for the RBI in making a decision. If this is a financial services company, widely diversified, regulated in other jurisdictions, maybe the central bank or the regulator will be a bit more favorable. If this is, as was reported in some quarters, a technology company, then it will be absolutely spectacularly interesting to watch what the regulator does, just for precedent's sake. But yeah, those are some of the questions to ask. But, stock is surging. They're not asking that questions right now.
For now, no, because I don't know about the bank per se, but the price is distressed and finding a sigh of relief of sorts. 25% up. Chakri Lokpriya, Managing Director, TCG Asset Management. Chakri, thank you so joining us on the show. Chakri, thanks so much for joining in, and appreciate you taking the time, 2 days, twice in a day today, about such important news. What do you make of this announcement and a few points that Ira mentioned, because you track this space so closely, Chakri? What could be the impediments? What could be the positives from this?
Thanks. I think this is indeed an extremely positive development, not just for Yes Bank, but the entire banking sector. Because if you look at roughly the 1.2 odd billion dollars that may come in, that's roughly 50% of the current market capitalization of the company. The current market cap is about, let's say, about 17,000 crores. Now, in such instances, the SEBI formula may not apply, and given that this is a situation where it is a bank which needs to clean up its books. When the deal happens, and it depends upon the type of the deal, even though if it comes, when I mean the type of the deal in the sense that there would clearly be a certain amount of restructuring of the current loan book, and which will help in the cleaning, which is a part of the cleanup. And the second, the form in which I know they've said it's equity capital, but it could be equity capital, it could be at stage at different levels. So against this backdrop, and also given that SME lending is an important component for Yes Bank, And reviving the SME sector is important for the government of India. And the valuations currently are very attractive in the sense that, yes, being a very troubled bank, but it about 0.6, 0.7 times book. If this capital does come in, it then paves the way for the bank to regain its lending capability. And so I think, in this case, there are bound to be certain amount of relaxations, or rather the approach in how the capital comes in, and the SEBI formula may or may not apply in this particular case.
Precedents, though, if anything to the contrary, precedents, Chakri, that such a thing would be done, because at it's $1.2 billion, roughly 8,500 crores on a market cap of 17,000, because I reckon some calculations suggest that the price would be 63, 65 based on the SEBI determined formula. If that were to happen, that's not just 33%, that's northwards of 33%. Okay, no, it's an expanded capital, so about 33%. No precedent to suggest that such a relaxation will be given, Chakri. Why are you so confident? And we also have Ravikant, but we'll get to him. But Chakri, just one follow-up on that.
Yeah, there is no precedent, but again, the Indian banking system has gone through unprecedented stress. So yes, it can be reclassified as, eventually it will become an FII bank, or rather classified as an FII bank, and the overall holdings will change accordingly. But I think that might be one way forward, a way out to make this deal happen.
Chakri, this is Ira joining in as well. I think, two questions. Let me first ask you the relevance of the capital for the bank. So assuming that this 1.2 comes through, would the market or would investors broadly see it as being adequate to both clean up the book and return to some level of growth, maybe not Rana Kapoor levels of growth, but, Ravneet Gill levels of growth?
Indeed, it would help to clean up the book. And second, I think it will be followed if the deal happens, and there would be a subsequent, again, round of capital raising at presumably at a higher valuation other than the current price. So I think and this is not really this is only the first step. I think there will be a second step of further capital raising at a higher valuation as well.
All right, so just hold that thought, and we'll come back to you in a minute. I'm going across to Ashwin Parekh of Ashwin Parekh Advisory Services, a long-time watcher of the banking sector, knows the rules very clearly. Mr. Parekh, thank you so much for joining us. Yes Bank has just sort of put out a notification to stock exchanges, which is worded to say that they have a binding term sheet from a investor for $1.2 billion. Now, when you do the math on an expanded base, that almost works out to one investor looking to take up to 33% in the bank. The RBI rules on the face of it would not permit that, sir, would they?
Well, two or three things. One, of course, is that, RBI, in the normal course, the regulations do not permit, an investment of that nature. But on the other hand, there have been exceptions made, in case of some of the banks, particularly, let's say, we have seen that in case of a couple of banks which were really had difficulty with their NPA recovery and other issues, a foreign investor and another investor was allowed a certain percentage of equity in the past, in the recent past, in fact, I would say. So, it is for the regulator. If this move will bring in more systemic stability in the sense, not from the point of view of just Yes Bank alone, but from the point of view of credit growth, from the point of view of the amount of capital that the bank actually does require to take it to the next level, then I suppose the regulator may consider it. It's a matter of the regulator has, so it's too difficult really to predict that the regulator will have the necessary your empowerment to do that. But if it does so, then it will certainly take this bank to a different level altogether, I must say.
Mr. Parekh, correct me if I'm wrong. So I'm looking at the 2016 circular on ownership, shareholding in private sector banks. So that, and I'm saying in the normal course of business, says that if you're a non-financial institution, you can go up to 10%. If you're a non-regulated, non-diversified, non-listed entity, you can go up to 15%. If you're regulated, well-diversified, you can go up to 40%. And then it says under special circumstances as permitted on a case-to-case basis. So you're saying this could fall on a case-to-case basis kind of story.
Exactly. See, because there are several other conditions as well. which will even when we talk about on a case-to-case basis, for instance, for example, does this investor have any investment, for example, or direct or indirect holding with any business house in the country? Does he have, for instance, these are some of the other conditions which may also be examined by the regulator when he will look at, even when it's done on a case-to-case basis. Quite clearly, within the current framework of regulations, it may not fall through, but there is this window of sort of, each one being a special case. That's where I was coming from. That the regulator could possibly look at the investors to begin with, examine, conduct some kind of a due diligence on him in terms of whether he's holding another bank, for example, in India, because there is also a dual point presence kind of regulation in India. So those aspects will be examined by the regulator. But I'm saying hypothetically, it can be done, provided those conditions are fulfilled.
All right, Mr. Parekh, last question, and this is completely hypothetical, and hence I know your answer will be hypothetical as well. There was some talk of a technology company being interested in investing in Yes Bank. Should a story like that actually play out, it'll be interesting to see how RBI looks at it, right? Given the fact that technology is becoming so core to banking, it'll be interesting to see whether the RBI sees that as a corporation, an industrial house, or draws a linkage between what's happening in technology and in banking.
No, so I do agree that it's a hypothetical question. And it's really difficult to speculate. One has to see who the investor really is. And I suppose there is no need for either, the media or for people like me, professionals to really know who the investor could be at this point in time, but till the regulatory approval has really come through. But I would certainly say that if there is any connect with the business, or there is any presence by way of investment in another bank already present in India, then of course it takes the whole question to a different dimension altogether. But I suppose let's wait. Instead of speculating. But all said and done, a good effort on the part of Yes Bank to really at least get a good investor, in this particular matter.
No, absolutely. Thanks, Mr. Parekh. Appreciate it.
No, that's it. We're still awaiting. We still don't know the name of the investor, but somebody putting in $8.5 billion would have done his homework quite well, I guess. Ravikant Anand Bhatt is also with us. He's been waiting by. And Ravi, you would have heard some of these conversations as well. From your perspective, what does this do for Yes Bank? Because as we were talking hitherto, it was struggling for growth capital. In fact, struggling for survival capital as well. If it's $1.2 billion indeed, which is allowed, it probably gets survival capital for sure and a bit of growth capital too.
Well, I would agree. I think the one single biggest factor that was constraining Yes Bank and which has also been leading to a consolidation in the balance sheet, rather a shrinking of balance sheet. And even for second quarter, we are actually expecting the loan book to shrink. And that was basically, the paucity of core capital. Now, they were at 8% of CET1, and although the Tier 1 looks respectable higher at, 10.5 odd, one must keep in mind that the 8% CET1 was actually making the bank look weaker compared to the private peers. So this is something which I think has been expected or rather hoped for, that a very meaningful capital infusion comes through for Yes Bank. And the number definitely is a very strong number, $1.2 billion coming in. I think that puts to rest some of the issues or some of the questions with respect to growth. Also because we know for a fact that although they have slowed down on the corporate side, they continue to recruit people, and continue to expand retail very well. So this was a juncture where growth capital was very much required. And with this, as well as the previous QIP, which was approximately 19.5 billion, this both put together should take their Tier 1 capital up to respectable 13.1% levels. So I think it's a very important development. It's a very good development for the bank.
It is. Chakri, just wondering, at 70-71, Yes Bank was... is it, with the options available right now for an Indian investor, would Yes Bank, by virtue of getting this much desired capital, be a bank that could come into the reckoning, or you would want to wait a bit?
If indeed this capital is coming in of $1.2 billion, and then it clearly makes it a hugely attractive proposition given the valuation. The valuation currently at even 70 rupees per share is hardly about 0.7 times book, a far cry from where Yes Bank or other private banks trade at. So Yes Bank used to trade, and where other private banks currently trade north of 2 times of book value. So I think now the talk should be less about growth, rate of growth for Yes Bank, but it's more about a cleanup of its book, a restructuring of its loan book, which will pave the way for future growth. And secondly, which is actually very important the way I see it, is Yes Bank after Rana Kapoor's exit was largely a bank without a significant majority holder. You can call them a promoter or an interested group, which is necessary for any company or any bank. So if this group and if this deal indeed really happens, then it does wonders, because then you have a management, a control management, who will then charter the growth for the bank and in the coming time periods.
Okay, Chakri, we leave it at that. Thanks much for taking the time out and being with us. I really appreciate your time. Ravikant, one final question. Does Yes Bank move up or down in your list of preferred banks, or you would still wait for details to come out?
No, I will wait for details to come out. I think if you ask me whether if this makes the outlook on the bank more positive, I would agree to that. But post last quarter results, we had turned sellers into the bank, the target price of 83. I think things look much better. We were actually looking forward to this, looking forward to a capital infusion of this kind of size. And more importantly, I think in the commentary tomorrow, we would look forward to what happens to the watch list, how much they recover, and based upon that, we would be tweaking our recommendation on the stock.
Most certainly. Ravikant, take a moment to thank you as well for joining in. Really appreciate your time today. Well, viewers, Yes Bank, the stock in focus on a day when the markets have hit new highs. The Sensex definitely has. Yes Bank too, up about 24% on this piece of news. More on that coming up on Countdown in about 17 minutes from now. Stay tuned. We'll be back in just a bit.